Thank you everyone for staying in the second half of the day. Um, we're gonna be discussing harnessing mega return in Indonesia. Uh, my name is Andi Haswidi. I'm the head of data and research at Deal Street Asia. I believe as attendees, you guys have access to our data product, so please make use of that. I think for 1 week. So I hope you guys can benefit from our data service. I'm joined here by four esteemed panelists who are industry leaders in the region VC landscape. So welcome, gentlemen, and Helen. I will let you start, Helen, to introduce yourself and maybe tell a little bit in terms of what's exciting that you've been doing lately. Go ahead.
Okay, sure. Hi, everyone. I'm Helen Wong from AC Ventures. A bit of my background, I spent about 20 plus years in venture capital. I started with GGV Capital, where I was part of the founding team. Moved from Silicon Valley to China, where I spent about 17 years looking at consumer internet, and both at GGV and at Chiming Ventures. I was very fortunate to be involved with the investment in Alibaba, and also invested in Tuto, which was like the YouTube of China. And then in the mobile internet era, invested in companies like Mobike, and then also more recently and more in this region, I invested in Akulaku. So yeah, at AC Ventures, which I joined last year, we focus very much on early stage investing, so seed to Series A. We across different sectors, such as e-commerce, B2B platforms. We have also done some in sustainability and quite a bit in fintech. So those are some of the sectors that we continue to invest in.
Go ahead, Eddie.
Hi guys, so my name is Eddie Chan. I'm founding partner at, as far as we understand, the only Indonesia-only fund globally that exclusively backs Indonesian homegrown companies founded by Indonesians. Like Helen, I've been a venture investor for about a quarter of a century. A lot of bad investments, but the ones that really changed my life were backing Elon and Peter at PayPal 25 years ago and bringing PayPal to Asia. Thereafter, Peter started Founders Fund. We've been privileged to be part of Founders Fund, and today Founders Fund, along with 35 of the top funds in the world from Silicon Valley, North Asia, are invested in Tuta to enter Indonesia. So we really act as an Indonesia beachhead strategy in large part for the world. I think, locally today we are privileged to be backed by about 35 of the top 50 to 100 Indonesian conglomerates and all the online unicorns. So we really focus on in-country distribution, where all of our resources are focused in one market, and that's Indonesia. And today we run about 250 million in committed capital. Our ticket size ranges from $1 to $25 million per company. We run probably the most concentrated portfolio in all of Indonesia or Southeast Asia. In 6 years, we've only invested in 29 companies. So every year we're doing at most 5 new companies. So I'll hand it over to Jeff over here.
Thank you. Hi, everyone. Happy New Year. Really glad to see a lot of familiar faces. Thanks to COVID, we don't see each other so much, but really energized by meeting a lot of people here. So hope to meet a lot of you. Jefrey Joe from Alpha JWC, Indonesia-focused fund. We are already in a third fund now. We've been in the market about 2015. Have about 70 portfolio companies now, and why I highlighted that number is because this year is going to be a very interesting year. What to expect, not sure. Let's have that discussion. Would love to learn from each other, right? But it's definitely going to be exciting. Long-term potential and trend and view is, we are very positive, we are very bullish. But we have 70 portfolio companies that we need to work closely with, and hopefully we can ride through these challenging times together.
Hi everyone, I'm Karan Mola from B Capital. I've been in venture for about 15 years, predominantly with IDG Ventures in India, and we used to invest across India and Southeast Asia. B Capital has traditionally been more of a growth investor. Last year we also raised an early stage fund, really focusing on 3 regions, the US, India, and Southeast Asia, with Indo being the primary market. And I think that speaks to the level of attention the region actually gets, and it will continue to get globally. We invest anywhere from seed to Series B from the early stage fund, and then from there on into the growth fund across all areas. One of our first investments from the growth fund was in Kopi many years back, and we've been pretty active in the region since then. So very excited to be here. This is my first conference in Indo for a long, long time. So I think just excited to see how many people are here and the energy, as Jeffrey said, excited to have this discussion. Thanks, Andy.
Great, thanks so much, Karan. Before we talk about what's next in terms of mega returns for Indonesia, right? I want to highlight a few numbers for you guys from our research that we did in the fourth quarter. So for Southeast Asia, there's no shortage of deals, I would say, and investors kept on, busy deploying capital in the region, in Indonesia as well. So in terms of deal volume, so this is deal numbers in terms of equity investment actually increased 6%. But of course, when it comes to value, it's lower by 27% for Southeast Asia.
Sorry, this number is 2022.
This is 2022, yeah.
Compared to 2021.
2021. So lower 27%. So in 2021, we had 28 billion of investment in Southeast Asia, right? So 27 drops. I'm not sure whether we are in a winter situation or not. Obviously, Helen, maybe let me get to you first, because I read your opinion piece at the Jakarta Post. I think it was a really good rendition in terms of what happened last year, right? The cascading impact of inflation, tech stock crunch, and everything else. One of the thing that pop up to me was that you said it's actually a warm winter in Southeast Asia, right? Can you unpack that for us a little bit?
Yeah, sure. I think, first of all, we've definitely seen the end of cheap money, right? I think that we've never been in high inflation environment for the last 40 years. But with this inflation being very sticky, I think we're definitely going to see high interest rates and hiking interest rates forcing the end of cheap money. So a lot of investors, a lot of LPs are cautious, right? They've seen their public portfolios get hammered, especially, it means that there's going to be more of a risk premium, right? So that is being demanded when you can, get 4-5% buying US Treasuries, right? So I think in terms of that, it would definitely impact our sector, the venture capital and tech sector. But I think that why I say it's a warm winter, because I think within the global environment, Southeast Asia remains a bright spot, right? In fact, I saw a Preqin survey, and they surveyed LPs, and they feel that India and Southeast Asia are the two bright spots for emerging markets. Yes, and Indonesia especially, if you look at the fundamentals, right? Very good, demographic trends, benefiting from the geopolitical situation, and being a net exporter of commodities. Also the fact that it's not a very highly levered economy, right? So rising interest rates doesn't hurt it that much. So I think there's a lot going for this region, which is why, I still think the fundamentals are good. And also, a lot of people are actually looking, at Indonesia as a place to, continue to deploy capital, like, for example, Chinese VCs coming in, due to what's going on in China. So I think that there's some positive trends. Last but not least, there's a lot of dry powder, right, in the ecosystem. A lot of funds were raised in the past few years that need to deploy. So maybe last year, second half, we see a slowdown, but I think this year they will have to deploy the funds. So I think in that sense, it will be a relatively warm winter.
Right. So I guess fund managers benefit from the boom time in 2021 in terms of their own fundraising, right? Great. So Eddie, as an Indonesia-focused fund, right? This is data for Indonesia. Deal numbers 40% up, but value plummet 60%. But that's largely due to the fact that in 2021 we had all the tech giants pre-IPO fundraising and whatnot. So we had a lot in 2021. 2022 is 3.7 for Indonesia. What do you make of that?
Yeah, so we just had our annual meeting in November, and we ran some statistics just specific to Indonesian homegrown companies. And what we found shockingly in 2022 was that the median pre-A deal was $2.7 million in capital raised in 2021, and in 2022 it was about $3 million. As it applies to Series A, our research found that it was about $9.8 million, and in 2022, once again, it was actually higher at $10.2 million. So I do think it's a function that a fair amount of capital was raised by many of our friends, including some on the panel today, in the course of 2021 and 2022. But I will say that at least, generally speaking, valuations are a little bit softer, but at least for our strategy, which is really predicated on investing in what I call almost uninvestable assets at early stage, deals that I think folks really take an uncommon worldview. And so in light of that, for us, I think 2021 we did a grand total of 2 net new deals. Many of our peers did 25 deals a quarter. And in 2021 I did 2. 2022, I think we did 1 in the first half and 4 in the second half. So I think there's a lot of capital in the market, and just got to be really disciplined. And there is definitely a lot more great founders, though, I would say. So we're really excited. As we look at the second generation of founders, I think in the first 5 years of our firm, 1 in 3 of our deals actually was sourced in the United States, whether it be Zendit, which is the most valuable company in all of Southeast Asia, Bintu, similarly. But I will say in the last 2 years, increasingly many of our founders are homegrown, which is really, really exciting. No different than what I saw growing up, let's say in Taiwan after the first 7 years of the ecosystem starting in 1990. Same thing I saw covering every single major Chinese VC, including Qiming was one of my clients when I was a lawyer many years ago. I'd say circa '07 onwards, you started seeing 2 camps, whether it be Sea Turtle or Bokam, and then you had Tusen Tusang are homegrown. Yeah.
Thanks, Eddie. Jeff, I'm sure you fairly agree, right? We're sort of in a warm winter here. And last year, I believe, correct me if I'm wrong, you invested in, there were 36 deals for you. It's actually up in 2022, right, for you. But can you give us, I know because you guys are, everyone here is, top VCs, right, in the region. That means that you deal with the top quartile startups, right? The best comes to you, I guess. And my assumption is that these startups, in terms of performance and valuation, still relatively resilient, right? But can you comment on the overall situation in terms of valuation, the things that people say about, repricing of assets? What can you comment on that?
Sure. So maybe the numbers first. 2022, we deployed, at some point of time, we deployed more in 1 year than the first 7 years of our existence. I hope we are doing the right thing, yeah? So, most of the deals were early stage. We also invest a couple of growth stage deals. But last year, we have deployed quite meaningful amount, right? So when we think about less value, but more quantity of deals, maybe that's really because of the mega deals, like the really late stage growth stage deals, pre-IPO deals. But in the early stage, up to last year, there's still a lot of deals happening. I always want to refrain using the word winter. The reason why is because I don't think we are in the winter. I'll share with you where I think we are, but because winter comes every year, summer comes every year. But where are we now? In 2023, we never been in this situation ever. We started in 2015. If I can share a bit on our journey, the first 7 years, it's a lot of growth, a lot of exciting stuff. Even last year, I always want to highlight that NASDAQ might be down. I need to check the number again. My team, please remind me. I really need to understand how much NASDAQ down, right? But the NAVs of all of the funds is still up, right? So last year, Southeast Asia, we do not have the NASDAQ as the publicly listed benchmark, but we have the NAV of the fund managers, the funds. Of course, a lot of people will ask, okay, yeah, you're mark to market, but is this still defensible and all that? We come to that later, but the fact is that if you're an investor in a privately tech companies, you will still see a markup in your investments, right? And so the first 7 years, a lot of growth, including last year. So last year is the 8 years is all uptrend. But of course now it's a challenging situation. Why the challenging situation? Because like what Helen said, I 100% agree that now the appetite and also the focus of investors is already different. And this is, of course, I mean, is it good or bad? Of course, the era of cheap money is better, right? The easier to get capital is better, but this is also not bad. This is a challenge, a storm that we need to go through. But why I really want to emphasize that I do not want to use the cycle, because we at Alpha JWC, we are really convinced, where are we going to be in the next 5 to 10 years? It's super clear in our opinion. Of course, there are risks. For example, there's always a political risk, which I'm very happy to share that I think, okay, 2024 will be the election. As of now, everything looks good, right? So there's political risk, yes, but compared to many other countries in the world, we are actually in a very good place. So we are still in the early stage of the digital ecosystem, digital evolution. So 5-year trend, 10-year trend is still very positive. We are still very bullish. But am I excited about 2023? Yes and no. Okay, there's a lot of challenges. I will be open. There are a lot of challenges. But this is something that we need to do, right? Uptrend, this is a bit of setback, challenging. We are like, all the founders need to show where the money is. We need to show our LPs how returns to going to be created. But the potential is still very positive.
Karan, so how excited are you? I mean, for Indonesia 2023, because I realize, I mean, B Capital has been more active, right? You were telling me that, you know, you've been coming down to Indonesia here more often and, you know, meeting more people here. So what's in store for 2023?
So I look at it this way, right? I think as a global firm, we have an opportunity to invest anywhere, and this is one of the chosen areas. There's obviously some reasons for that. And we've got a growth fund and an early stage fund because we believe that the region can absorb that sort of capital with us, everybody here, and many other people. I think what's interesting is, look, it's also, I think Jeffrey alluded to something which I also thought, it's also the first time this part of the world is going through this sort of a cycle. I mean, some of us have seen this in other areas, in other regions, but it's really the first time you're going through this. And actually, we're not that badly hit right now. And my hope is, like everybody else, I don't think we will get that badly hit. So it's an interesting evolution, right? It's a learning. And what tends to come out of this is, if structurally and fundamentally things are solid, which I believe they are, very, very much so, you will have you're already seeing the higher quality of founders, higher quality of companies getting built. I've seen that in the last 6 months alone. What that means is all the capital that's there on the sidelines will be put to better use. And there'll be some tough choices to make in this year, and that's why maybe 2023 will be a good and a bad year. But it's a necessary part of the process. It's very much needed. What I think really excites me is, in the few years that I've been coming out, the change in the perspective of founders and investors and everybody in the ecosystem is to really focus on the quality in building companies. That, if I just compare it to India and the US, because those are the two markets I know better than others, I think that change has happened in a shorter period of time here. And maybe that's just part of the process. But I think that's what excites me, because fundamentally, if all the building blocks are in place, capital is available, founders are there, and everybody's thinking about things the right way, yeah, you have to take the right steps in the immediate term. You can't be oblivious of what's happening in the macro environment. And some things are not in our control. But I think if you take the corrective steps to build the right way, and I keep coming back to that word build, because that's what we're backing at the end of the day. Our money is useless if somebody's not building it correctly, right? It's a means to an end. That's the part which excites me, which excites B Capital, and I think that's why we see more and more opportunity over here.
Great. I just want to do one follow-up on your investment in Southeast Asia, right? So one of the one of the dramatic things that happened in 2022 was the crypto crash, right? So everybody got affected, and there's been cascading of bankruptcies, right? B Capital invested in ZipMax, I believe, and my question would be that what was the lesson learned, and what does this say about the outlook for centralized exchange and decentralized finance in general?
Yeah, so I think, in general, when you look at crypto, and we've invested in exchanges in India, in the US as well, right? And I think there have been some lessons in terms of what the regulatory change that's happening as we speak, and how to sort of keep in touch with the investment in pace with how the regulatory changes affect. I think there is a long-term view and then there's a short-term approach. And I'm doing this on purpose in general terms without getting into specific companies. But I think that part of it is important because I think fundamentally if you believe in the asset class, right, and in the future, then you will change your approach as the macro environment changes. But I think, look, with crypto, there's been so many changes and developments over the last 6 months. Everybody's had to adapt. And I think companies most companies have been able to do that, at least in this part of the world, better than others, to be honest.
Right, right. Eddie, I'm gonna jump to you because this is not necessarily about crypto, right? But it's about how, as an investor, you invested in Pintu, and crypto now is in a bear market. My question is really, when something dramatic, happens, such as, in crypto, what do you do? How do you help navigate your portfolio in this seriously tough times? Yeah.
No, I think it's we obviously get this from you and certainly a lot of LPs. So Pintu is one of the companies that we're really most proud of. It's a business that we identified via our Southeast Asia Turtle program, where we found the founder on campus at Harvard in 2018 when Bitcoin was down about 70%. So it was circa $6,000. We worked with the founder for about 6 to 9 months until Bitcoin went down to 3,000. And at that point, that's where we built the conviction to get behind the business. So Bitcoin was down, I guess, 85% at that point. And the number one key concern during that 6 to 9 month period was really regulation. We certainly had followed India, prior to that, where, crypto was hot and, some regulation came around it. So we worked very closely with the regulators in building out the regulations. And I kid you not, about a year later, we were one of the first companies in the country to get, brokerage license, et cetera. And so I think licensing is the key piece. We built that business from scratch. Thereafter, we brought a lot of our key partners, the top global investors, whether it be Pantera, Lightspeed, DST, Head of Sophia, et cetera, Coinbase itself into the market. So for this business, I think that the number one concern for us was regulatory from day one. And in light of that, we worked hand in hand with the regulators. And as we've kind of seen this crypto, some of the challenges in the market over the course of the last year, similarly, I think with FTX, et cetera, a lot of governments obviously have taken a keen eye and try to regulate a little bit more. And once again, this is a very bright time for us to work hand in hand with the regulators. And we're very fortunate as a company that just wrapped up a $113 million raise after the market meltdown in May. So hundreds of millions of dollars on balance sheet, where we publicly come out to the public and really even published our reserve ratios and versus our liabilities to give the public a lot of confidence. Indonesia is a market, as we all know, with 15 million crypto users and just, I believe, 8 million stock tradings. So we take a very long-term view. The market is down, but I think that if you're a long-term believer in the asset class, then we'll be very, very successful. As the company's super liquid, we're working hand in hand with the government to really ensure the protection of consumers and really educate the consumer. And long-term, we're really bullish on it. And we just did actually another crypto deal. Once again, we are not a crypto investor, but rather we're very excited to get behind what I call uninvestable assets that no other VC in the right mind would back at early stage. So recently we backed an NFT marketplace, once again, at Bitcoin 15,000, not at Bitcoin 70,000, where many of our peers were launching crypto funds. We take a very disciplined approach and really identify assets that are uninvestable, get behind founders that really take a worldview that's not very common, and really build with them from day one.
Thank you, Eddie, for taking the question. So the story of crypto, wealth tech is obviously, we did a special report on wealth tech because it was growing so much, right? 2021, 2022. But this is really about, about millions of Indonesians coming to, millions of Indonesians become investors, like young Indonesians. For the first time, they invest in securities, invest in digital gold, in many products, right? So they invest small now, but in the next 5-10 years, as they grow mature, have family, at least the thesis is that this this pie is going to get so much bigger, right? And this is sort of like a testament of Indonesia's growing middle class, right? So Helen, let me get to you. With what you guys have shared, I mean, in terms of the challenges ahead, right? We're entering an sort of like a, not entering, but we're already in an age of scarcity, inflation, and there's a lot of risk going forward. When it comes to this Indonesia's middle class expansion story, is it, I'm sure you would say, I mean, it's largely still intact, right? But what's your argument?
Yeah, I would say it's a long-term, trend that we're definitely, positive about, like for the reasons that I gave just now. The growing middle class is definitely a long-term trend. But I would say that, does it mean they're not, affected by inflation? And no, right? I think that would be crazy to think that way, with rising, energy costs, fuel costs, and food prices, right? I think that we need to be cognizant of that when we look at investment opportunities. But I think the long-term story remains intact. Yeah, so, and also I think the way they're consuming is also different, right? So one of the things we've been looking at is, for example, the live streaming e-commerce trend that's, very developed, very mature market in China. But is that last year, I think we saw the growth of TikTok live streaming, TikTok shop in Indonesia, taking out like 70% of overall TikTok shop GMV worldwide, which was quite amazing, right? That so much of it is contributed by Indonesia. So I think that, and I looked at a chart that showed also like, the pre and post pandemic consumption trends in Indonesia is actually still higher, right, than the pre consumption. It's still higher than pre-COVID. So I think that's, shows the strength of the Indonesian consumer. Yeah, so I think on the whole, we continue to look at some interesting D2C brands, some interesting ways that the consumer is spending, besides the traditional e-commerce.
Jeff, I know you did a very extensive study on tier 2, tier 3 cities, right? So I think it was an amazing view into what's going on. Do you still, I mean, that was 2021, I think. Do you still keep the same view considering what's going on now?
Yes, and maybe I want to highlight a bit on how we think about the economy. There's the overall economy, there's a digital economy. When you ask about inflation, in terms of general economy, we need to be concerned. Inflation might affect a lot of things, and also will affect the demand. But the effect of inflation to digital economy might not be as bad. The reason why is because in digital economy, all the founders is trying to innovate, whether innovating products, business, trying to digitize supply chain and all that, and all of those activities will create value. Yes, inflation will affect them, but if they do not create value from the product that they built, then there's no point of existence, right? So from the way we think about it is that, we will deal with all these, general economy challenges and all that, but don't forget that number one, we are still like the internet penetration, the adoption of a lot of digital bank, digital payment is still on the low side, even though there's a lot of growth. So because of that, we believe that the growth in the digital adoption will offset whatever the economic challenges, barring there's no crazy stuff happening, right? Inflation,
What's crazy, Jeff?
Massive political stuff, so all this, like war, for example, that's pretty extreme, right? Barring any extreme circumstances, we should be okay. And maybe other than that, so what we are also seeing is that now whatever, especially for the seed companies, whatever that they are doing, they need to take into account the economic challenges that they will face. So is inflation a worry? Yes, but the current founders, they already have that in their mind. And whatever that they want to build, they already know that it's not going to be as easy. It's going to be a different era pre-2022, 23. So the playbook is different, and we are hopeful to see more innovation and more companies that will be actually more sustainable, because that's actually the requirement right from the get-go.
Great, thanks, Jeff. Let me turn to you, Eddie. I mean, we're here in Southeast Asia, in Indonesia. I mean, but we're not the only ones, driving the narrative, right? There's a narrative coming from the outside in terms of what's going on globally and their view. And as a, Indonesia-focused fund, you guys focusing on Southeast Asia, what's the conversation like when you meet LPs in the US? I mean, you're in the US a lot, so tell us.
Yeah, no, so that's once again a question that we get quite frequently. So yeah, for us, I personally spend about 6 months a year in Silicon Valley. So we are the only Indonesian or Southeast Asian homegrown firm with a presence in Silicon Valley, which I think is really special. So we have pretty good pulse of what's going on there as well as in North Asia. So US also is our largest source of capital from an LP perspective, which I think once again is very unique. Frankly speaking, when we started this firm circa 2016, 2017, I think people were off by a magnitude of 10 about the scale of Indonesia, whether it be from a GDP perspective or from a population perspective. So it's been really exciting, really thanks to a lot of the folks on stage here today, building some incredible companies to put Southeast Asia, Indonesia or Southeast Asia in large part on the map. In terms of, as I think from an LP perspective, getting back to it similarly, 15, 16, 17, I think it was super early days. We launched in 2017, I kid you not. Frankly, we had no idea who leads your A, B, or C. Maybe at pre-A you're fine, but A, B, or C were very much an open question. And in light of that, we brought on 35 of the top funds in the world, really to invest in our fund, to, really back. So hence our, call it fall rate across our first fund at pre-A is soon to be 100%. And I think in 2018, 2019, that Series A issue in large part got solved because many of our friends here on the stage raised funds that could really, lead Series A's, and so did we. And then in 2019, 2020, 2021, I really think that this gap got solved. So you have a full stack of capital today. So I think that has given LP community even more, conviction in that you've really, in large part, eliminated one of the biggest risks when we started this firm, which was financing risk. You had no idea who would lead A, B, or C. D, you'd be safe. You'd have Warburg Pincus, KKR, all of which were set up shop here. So I think that is one key issue that we faced when we started this firm was, is there actual sufficient capital in this firm, in Southeast Asia or Indonesia? I think the talent issue was also similar. In 2015, 16, I mean, I kid you not, Gojek in large part just started building some momentum in 15. I think you could find founders, that wasn't the challenge. And you could find entry-level talent, but the whole middle management was a complete vacuum. I kid you not. Call it the director, VP level. The middle management was non-existent, and that was a big threat for all our businesses. And over the course of the last 6 years, thanks to many of the pioneers in the market, and now that certain of these companies, Libby, Goto, Grab have gone public, the next generation of talent has spilled out, and we can kind of fill a lot of these kind of middle management, VP level. So I think the talent gap is really, really improved. The other piece, I think, is government support, right, for an ecosystem to thrive. And we do have to give the Indonesian government a lot of credit, whether it be omnibus, et cetera, really making it clear and really deregulating, allowing foreign ownership. So I think this whole foreign ownership issue that in large part was a problem has been solved. I think labor law is a lot more clear. Yeah. And just the openness of bringing in both financial as well as human capital, welcoming folks to come in market as well as financial capital, where if you look at the 4 largest countries by population, Indonesia is one of those, from a geopolitical perspective, have done quite a fabulous job. You look at the G20, Xi being here, President Biden. If you look at China, the Chinese capital is not very welcome in the U.S. nor in India. If you look at, let's say, for India, similarly, so I think Indonesia's done quite a good job, both, being very welcome from a financial capital perspective, welcoming Chinese capital, welcoming U.S. capital, et cetera. So I think having all these stakeholders, lastly, also the private sector, where this is a market in 2017 when we started with a 0% technology weighting on the local stock exchange. It was really first, second, third generation owners that were really encouraged by their mom, dad, aunt, or uncle to really digitize their family-owned platform. And it was really much of a nice to have when we started. And today, I kid you not, post-pandemic, it's a must-have. So when you have all these stakeholders and kind of pushing the right direction, I'm not saying 2023 is going to be great, but long-term, I think it gives us a lot of hope in the direction in the future. So that'd be my feedback on the LP side. We've solved all 4 of these. The exit, at least been solved. We've seen some proof points. I'm not saying they're performing well. And is the ecosystem moving fast enough? Is an open question at the exit front, but seems to be pointing in the right direction.
Sorry, Andy, if I can
Yeah.
add one thing,
Go ahead.
because I want to leave a lot of optimism as well. I want to share if there's any reason for optimism, right? So I don't want to think everyone thinks that it's a pretty gloomy year. On the LP side, it's actually there's a lot of reason to be optimistic about. We talk to a lot of LPs globally because of the geopolitical situation. Indonesia is actually in a very bright spot, right? We are stable, economy is growing, young population and all that. So there's a lot of interest. A lot of mega funds, mega investors are really looking whether they need to deploy in Indonesia. So in the next 1 year, if they decided to enter, we will see a different pockets, large pockets of capital will be committed to here, right? So on that reason, there's a lot of reasons to be optimistic, and maybe let's really try to connect and then share and then try to show what are the good things, the good companies, where the good returns will come.
Thanks so much, Jeff. I just want to remind everyone that you can send us questions. I'll pick from the monitor later, so please do so. I'm gonna switch gears slightly, so I'm gonna go to you, Karen. So we're fairly optimistic. We try to be optimistic, right? I mean, if we look back, we have seen how 2022 we see the first generation of unicorns going public, right? And we have the second generation, the likes of Kopi Kenangan. We have Sendit, and hopefully soon Halodoc. I mean, a lot of new sectors. There are more specific, right? So, I mean, what do you think? Like the third generation is like? What kind of sectors are you looking at B Capital?
Actually, and that's a great question, and it feeds well into the previous one because with LPs, and I think the other thing that LPs are looking for is what LPs look for everywhere is where the exit's going to come from. Will they come from public market exits or from more strategic? And I think that's a bit of an open question right now. The last 12 to 18 months has been a bit of a good indicator that the market can support large public exits. You mentioned some of the ones that are likely to go in the next year or two. I think there's two different pockets. One is a lot of the consumer-focused companies which are playing on consumption-based behaviors across different verticals. The second is around the platforms which are really enabling businesses to digitize, to help distribute in a much more efficient way, whether it's across agriculture, whether it's across industrials, whether it's across other areas where you've seen basically where you see large chunks of the GDP of Indonesia, which can then be digitized, right? So I think those are the two distinct areas where at least we believe exits can happen, and that's what then funnels into what our investment thesis is. One of the I think key things which continues to be a bit of a question, not for LPs, but I think in just building out the ecosystem more is the question of middle management, as Eddie mentioned, and also around technical talent. Especially in early days, I think that's where companies still struggle to get good, good talent, really, and they look for other options. When they can afford to pay, then that becomes a lesser challenge. But I think that's something which I know different people in the ecosystem are trying to solve for, and there's been some progress. That will ultimately determine how quickly the companies are able to scale up, because the demand is not the issue as much as it is on businesses and consumers. It's just how quickly you're able to service that. That will then create the next level of unicorns and large companies, and really getting companies more than the unicorns. I think getting companies to the point where they can build $50, $100 million revenue businesses to then be able to create value, whether it's through an M&A, whether it's through going public. I think those are the key building blocks which I think as an ecosystem we focus on and try and build and try and encourage. That will probably help a lot more, in the years to come.
Right. Helen, you spend a lot of time and you have a lot of experience in China, not only in tech, but really looking at the consumer sector, right? You've seen how the ecosystem developed in China. So if you look at Indonesia right now with the challenges that we have, how is Indonesia? I mean, in terms of the trajectory of the development of the tech ecosystem, how is it going to be different from, I mean, learning from your experience in China, and what's going to be like Indonesia's like unique selling point, or kind of like resilience in a way?
Yeah, I think in terms of stage of development, I would say that the large horizontal platforms have been built, right? I mean, you see the public IPOs of the go-tos of the world, but I think then at the next stage would be looking at more the verticals, right? So fintech has been pretty developed, but healthcare and also other sectors like education are still relatively underdeveloped, and also we think the other trend that we saw in China was that digitization of different industries, right? So that's more on the B2B side, but we did see that also happen in China, and we see that happening here as well. So for example, we're investors in Aruna on the fishery side. So I think those trends are pretty easy to see the shift. And I mentioned live streaming on e-commerce side. That's also a shift that we are seeing here as commerce becomes more from search based to more interest based, right? And more push rather than pull. So I think those are some of the trends that we can see very very clearly coming from China. Sorry, you had another second part of your question.
Yeah, I mean in terms of Indonesia's resilience. My question is actually going to lead to, in terms of these unicorns graduating to a public market, what's the outlook you reckon?
Well, I think the public markets are not great right now, but the best companies I believe can still go public. But obviously, it's always a pendulum, right? Like how investors, sometimes they want more growth, and now they want more profitability, right? And so if you're not profitable and you don't have a good unit economics, then it's tough to face the public markets. I mean, the other thing is obviously the predictability of your revenues, right? So I don't know if anybody saw this report about which highlighted the rule of 200%, basically saying that your retention, your 12-month retention, plus your gross margin, plus your net margin, plus your growth has to be equal to 200%. Otherwise, you're not not good enough, right? So I think that's an interesting matrix to look and to see that making sure that you do have a healthy model, right? I think what we've learned is the excesses of the easy money, right? Especially 2021, is that led to a lot of bad unit economics, bad business models being funded, and so hopefully that there'll be more of a focus on the right matrix now.
Great. Unfortunately, my time is up, but I will allow one question from the audience. So, what are the biggest barriers to overcome for M&A exit in Southeast Asia? Any takers?
Okay, so it's hard stop. Okay, I'll try to be quick. M&A, I believe that this is the right time for M&A. Why? Let's reduce the competition by collaboration, because I'm sure that the most important thing for this market is to show investors that there's money to be made. How to make the money is that if we have less competition, hopefully we can increase the chance of success. There's a lot of discussions happening. I hope to see more and more M&A, because that's the right thing to do, even for us, even if it means that we need to have a bit lower return, but it's more guaranteed. We'll take it, right? So M&A, we should definitely, hopefully there will be more M&As.
Anyone else want to add?
Sure, I can add. I think the biggest barrier for M&A is always trust. Because I think that companies are always wondering, how much should I review about my company's, data, and whether I can keep my job after this acquisition or this M&A. But I always encourage founders to think more strategically, to think of the company as not only their baby, but think about all the stakeholders and do what's right for the company. Yeah.
Thank you, everyone. Thank you so much. Thank you.